Picture this: a world where innovation meets sustainability, where every investment has the power to shape a greener future. Imagine being part of a revolution that's not just changing the planet, but also your financial landscape. And you should be. Welcome to the Savvy Finance Corner YouTube channel. Wealth begins with knowledge. Today, we're diving into the exciting world of clean technology investments. Clean tech is revolutionizing how we think about products, services, and processes. It's all about using renewable materials and energy, cutting emissions, and minimizing waste. Unlike traditional industries, clean tech puts sustainability at its core. But why does this matter now? Well, we're facing a perfect storm of rising global energy demand, an urgent need to combat climate change, and a shift in public expectations towards sustainable business practices. It's a game changer, folks. For over a century, our economies have been built on fossil fuels like coal, oil, and natural gas. But these resources are finite, and let's face it, they're not doing our planet any favors. That's why we're seeing a massive shift towards renewable solutions like solar, wind, and hydro. These aren't just eco-friendly alternatives. They're becoming economically competitive too. Investors are waking up to the fact that fossil fuels are risky long-term bets, while renewables offer growth and stability. Now, let's talk about what's driving this clean tech investment boom. First up, climate change. We've all seen the headlines about extreme weather, wildfires, and rising sea levels. It's not just scary news. It's a call to action. Governments, corporations, and international bodies are setting ambitious net zero by 2050 targets. To hit these goals, we need massive investment in clean technology. Smart investors see these targets as golden opportunities for growth. But it's not just about saving the planet. Governments are sweetening the deal with incentives. In the US, the Inflation Reduction Act offers juicy tax credits for solar, wind, EVs, and hydrogen projects. Canada's throwing money at carbon capture and clean hydrogen. The UK and EU are implementing carbon pricing to nudge companies towards cleaner operations. These policies are like a safety net for investors, reducing risk and speeding up adoption. And let's not forget about corporate America. Companies are under pressure from shareholders and consumers to meet ESG standards. That means cutting emissions, reducing waste, and being transparent about sustainability effort. To do this, they're pouring money into clean technologies. For investors, ESG compliance isn't just about feeling good. It's about future-proofing your portfolio. So, where exactly should you be looking to invest? Renewable energy is the backbone of clean tech. Solar and wind are expanding rapidly as costs plummet and scalability improves. Hydropower remains a powerhouse in countries like Canada, while geothermal offers stable baseload energy. Electric vehicles are another hot sector. Companies like Tesla, Rivian, and BYD are reshaping how we think about transportation. And don't forget about battery storage. It's crucial for balancing supply and demand from renewables. Breakthroughs in lithium, solid-state batteries, and recycling make this sector incredibly attractive. The hydrogen economy is also gaining traction, especially for hard-to-decarbonize industries like shipping, steel, and aviation. Countries like Australia, Germany, and Japan are betting big on hydrogen infrastructure. Carbon capture and storage technologies, while controversial, offer a way to reduce emissions from existing industries. Oil and gas companies are particularly interested, seeing it as a bridge technology while they transition to cleaner operations. Smart grids and digital energy management are the unsung heroes of the clean tech world. These technologies use AI and IoT to optimize energy distribution, prevent blackouts, and open up new business models like Now, let's take a quick tour around the globe. The U.S. is leading the charge in venture capital funding for clean tech startups. The Inflation Reduction Act is pumping $369 billion into climate and energy funding. States like California and Texas are at the forefront of this revolution. Up north, Canada is leveraging its abundant natural resources to become a clean energy powerhouse. They're also focusing on sustainable mining for critical minerals needed in batteries and EVs. positioning themselves as a global supplier. Across the pond, the UK is dominating in offshore wind with massive projects in the North Sea. London's also becoming a hub for green finance, issuing some of the world's largest green bonds and sustainable funds. Down under, Australia's harnessing its vast solar potential and scaling up renewable projects. They're also investing heavily in green hydrogen and exporting critical minerals like lithium, which are essential for the global battery supply chain. So, what does all this mean for investors? Well, the opportunities are massive. As the global population grows and economies expand, demand for energy will skyrocket. And fossil fuels just can't keep up sustainably. Clean tech is the only scalable solution. The financial sector is getting on board too. Green bonds are allowing governments and corporations to raise capital specifically for clean projects. This market is expected to hit trillions of dollars in the coming years. And let's not forget about jobs. The International Energy Agency predicts millions of new positions in renewable energy, EVs, and hydrogen. As an investor, you're not just getting returns. You're supporting industries that are creating jobs and driving innovation. But it's not all smooth sailing. Clean tech faces some challenges. High upfront costs and scaling barriers can be significant hurdles. While costs are falling, renewable projects and advanced technologies like hydrogen and carbon capture still require substantial capital. Policy uncertainty is another risk. Governments can change direction after elections, creating uncertainty for long-term investors. Subsidies might be rolled back or carbon prices reduced. There are also technology risks to consider. Some solutions aren't fully mature yet. Battery storage faces recycling and efficiency issues. Hydrogen requires expensive infrastructure. As an investor, you need to balance high potential with high risk. Looking ahead, the future of clean tech is bright. By 2050, experts predict that clean energy will dominate global markets, replacing fossil fuels as the primary energy source. We're also seeing exciting developments in combining renewable energy with digital tools. AI can optimize grid operations, IoT can monitor consumption, and blockchain could enable peer-to-peer energy trading. In the long run, sustainability will become a competitive advantage. Companies that adopt sustainable practices early will have stronger reputations, reduced risks, and access to growing green capital markets. Sustainability won't be optional. It'll be the norm. To wrap up, clean technology is just an environmental choice. It's an economic necessity and one of the defining investment trends of the 21st century. It's reshaping our world, our economies, and our future. So, here's a question for you. Would you invest in clean technology today? Why or why not? Drop your thoughts in the comments below. And if you found this video helpful, don't forget to like, share, and subscribe to the Savvy Finance Corner for more insights on clean energy and innovation. Remember, the future is green, and the time to invest is now. Thanks for watching, and we'll see you in the next video.